Here right now with Matt Giangregorio, Matty G from Charlesgate Realty. Matty G, thanks for stopping by, bud.
Absolutely. Thanks for having me on, and I love the new space. It looks great.
Like the new digs?
Yep. They tell me I have a face for radio, but appreciate you taking the risk, putting me on camera here.
No, we're psyched to have you, and we're right in the middle of the winter market, I guess you could call it. Weather has cooperated to the point. It's freezing cold this week, but not a lot of white stuff on the ground. How is that impacting the market right now from your perspective?
Well, I don't really see the weather impacting the market so much. It's 2019. People look at real estate online. I think that is a misconception that people have from maybe 20 years ago when people would drive around, look at signs in the ground.
Just the globe on Sunday, yeah.
The globe on Sunday. Now, it's freezing cold outside. People are home looking at places online.
Right. And there's people out there that I feel like the talk is interest rates are going up, the market is softening. What are your thoughts on that?
So I think that what we're seeing is a healthy balancing of the market. I think it's a misconception that things are softening, except for the ultra high-end luxury market. I think we are going to see a little softening there. But like you said, we've heard a lot of talk on real estate's rising. Some first-time buyers are getting a little hesitant, maybe backing out of the market because Feds have raised interest rates. We're starting to come out of quantitative easing. But what's the rate today? 4.5?
Mid-fours, yeah. And the market is normalizing, right? I mean, it's definitely not softening. I think we're just entering into what we would consider a normal market over the past 10 years.
I agree. And if you look at rates since 1971 on a 30-year fixed residential mortgage up until 2008, they're pretty much between 6 and 18%. Right now we're at 4.5. So we're still very low with interest rates. And I think people backing out of the market or freaking out about that is not a good idea.
That's my guy. I'm coming from the mortgage world. I'll bring you on calls with me. I mean, that's a stat right there. 71 to 2008, they didn't go below 5, I think you said. I mean, rates are still so ridiculously low, and people are so rate sensitive. Now is a great time to buy. The market's normal. Interest rates are still low. People are talking about the Fed going up, and they don't realize there's not a direct correlation to mortgage rates. I think another key point is when people buy real estate, you're not buying an interest rate as well. People trade or switch out money all the time over the period that they own a property. You're not tying yourself into 30 years.
That's right. And to touch on that point, mortgage interest rates are not tied to the Fed interest rate. Mortgage rates are not at 52 weeks highs right now. The 52-week high was 5. We're at 4.5 today, even though Fed interest rates were raised last month. So there's not a direct correlation. Another thing is that, yes, rates are probably going to go up within the next year or two. So that doesn't really make sense to me to wait for the rates to go up. If I was in the market to buy, I want to get them in low. Buy low, sell high. That's real estate, right?
Right, absolutely. And at the end of the day, when you're purchasing real estate, it's more than, like we were talking about, just a rate and payment. I mean, it's lifestyle, it's owning something, it's building equity. There's so much that plays out throughout it. The interest rates will come and go. You can trade it out as they move, and life events happen that require you to change your loan. Don't miss out on home ownership.
That's right. And, another thing, say that you're a newly married 27-year-old couple. You're buying your first condo together, say in Southie or the Back Bay. Your plan is to start a family, move to the suburbs within the next 5 years. Both of you have steady jobs. Get a 7/1 ARM if you're concerned about a low 30-year rate mortgage. And I think it's important to speak to a lender a mortgage broker like yourself that knows what they're talking about and can give you those different options.
Right. There's always options. A lot of people don't realize that. You don't have to be pinned to a 30-year fix like you're saying. But yeah, I mean, now is a great time to buy. I'm excited about 2019. I think it's going to be a great year for real estate in Boston.
I agree. Like you said, I think we're seeing the market start to stabilize, become a little more healthy, not so much a seller's market. I think, like you said, the misconception is that the market's softening because there's not 10 offers on every property. That is not normal.
Right.
We're starting to enter a more normal, healthy market. I think property values are going to continue to go up, not necessarily 7% a year like they have been going, but maybe 3-4%. That's pretty normal. I think the exception to that is going to be the ultra high-end luxury market, which I think is softening. We've already seen it in New York, San Francisco. I think they're building so much of that in Boston. That's going to soften a little bit.
I know heading into the weekend, a lot of open houses going on Sunday. It's a big topic, I know, in the Boston this weekend. Oh, wait, Super Bowl weekend.
That's right. Go Pats.
Big game. Quickly, what's the outcome?
Off the top of my head, they're definitely going to cover the spread. I know that. You can take that to the bank. I'm going to say 35-28 Pats.
38-24 Pats.
Sounds good to me.
Let's do it,
Let's go
right?
Pats.
Fantastic. So wrapping up, Pats win. Check out Matty G on social media. What's your Insta handle?
My business Instagram is Matthew Giangregorio. And you can also find me on charlesgaterealty.com or LinkedIn.
Look them up, follow us, share below. This is Real Estate Talk Boston. Go Pats.
Go Pats.